If you're searching for a hot trade, take a look at uranium. The commodity surging almost 50% so far this year, boosted by the Russia-Ukraine war fallout. But months before, one major metals investor got deep into the uranium space, and the decision is paying off. John Champalia is the CEO of Sprott Asset Management. The firm runs the Physical Uranium Trust. John, great to have you with us.
Great to be here. Thank you for having me.
You say that we're in the second inning of a multi-year cycle, and I'm wondering how you think of this game and how we get to the end of this game. How many reactors have to come online? How much uranium do we need to sort of satisfy in terms of demand?
Sure. Well, there's the fleet of about 400 reactors around the world use about 180 million pounds of uranium every year. And right now there's about 130 million pounds coming out of the ground through primary production. So I might ask, well, where's this deficit being filled by? And basically been secondary supplies that have been fed into the market, but that is quickly coming to an end. And a lot of that is being driven by non-utility buyers, and those are investments made by different funds like ourselves and different hedge funds that want to get involved in the physical commodity. And I would say over the last 12 months, those non-utility buyers have probably accumulated over 50 million pounds of physical uranium. So the utilities, who are the end user of this commodity, are obviously competing with non-utility buyers right now.
So right now, as it currently stands, from what I am understanding, just the current fleet of reactors, and these are reactors that are operational, that they are running, they will not be decommissioned by the end of the year. I'm just trying to understand what the dynamics are in terms of how sticky this demand is, because I understand that many reactors in Europe are going to be decommissioned in the next year or so.
Yeah, well, what we believe is there's a new renaissance coming in the nuclear power industry, because last year, it was really all about decarbonization and energy transition. Governments around the world acknowledging they need to include nuclear as part of their clean energy mix, because renewables have issues with intermittency, as we all have learned over the last 12 months. So governments around the world are supporting nuclear power. Now, if you fast forward to the start of the invasion of Ukraine, that has now added additional stress to the sector, because now governments are increasingly focused on energy security. And that energy security, as we're seeing, certain governments in Europe are learning the very hard way that transitioning away from nuclear, like Germany has done, is causing them a lot of problems, whereas France, their neighbor, who's been very pro-nuclear over its history, are not having the same kind of issues.
Hey, John, it's Tim. Congrats on a call that I know you've been committed to for a long time. And it almost seems that, everybody is coming on board with uranium. Talk about almost the self-fulfilling and feeding dynamic of liquidity in the markets for uranium plays, and why that also is going to push, I think, more institutions into this trade.
Sure. Well, I'm going to start off by saying that it was about a 9-year bear market. So over that period of time, there was massive destruction of capital. And quite honestly, 18 months ago, you couldn't talk to anybody about this category. It was completely out of favor. Fast forward to today, and over the last year, we've had conversations with probably 100 different financial institutions around the world, and they're all interested in this theme because of decarbonization and energy security. And one of the big takeaways for investors is it's a very small market. It is, if you look at the amount of uranium that's used by these reactors, it's about $11 billion a year. And if you look at the value of all of the uranium companies, they're publicly traded, there's about 80 of them. They only amount to $37 billion in total market cap. So if you compare that to some of the oil and gas companies like Exxon's 10 times the size, the market cap of those 80 companies, or even some of the smaller oil and gas companies are 2 to 3 times the size of the 80. So investors are realizing this, and we think there's a lot more capital to come into the sector.
John, great to have you with us. Hope you come back soon. John Champalia of Sprott Asset Management. It's been a hot trade. It doesn't feel like a fad, though.
No, not at all. I mean, Tim's been talking about this. CCJ, I think, 11-year high today. You're going to start seeing more upgrades. You've had a couple of them over the last month or so. Newmont Mining, completely different, I get it. But mining stocks, Newmont Mining made an all-time high today, a name we've been talking about for a while. So the mining trade is not, it's not a fad, and I don't think it's even close to getting started.
Are there giant uranium companies that are private that will become public? Or is he talking about the small amount of market cap that there is for uranium companies? I don't know the space that, so...
That and the physical, and just owning the physical, I mean, is part of where you're going to continue to see more liquidity into the space, owning it outright.
The actual urea.
Yep.
You've been in this trade though too.
Yeah, and I agree. It's not a fad. It's about energy security. It's about a dynamic that I think Germany's learning painfully. It's about decarbonization. I mean, there's 3 or 4 different trends and themes rolled up into one that are not things that happened overnight. I'm long Sprott, the asset management company, by the way, who I think are involved in a lot of very interesting areas that I think are just in the same kind of tailwind.